How knowing about risk assessment and premium calculation help policyholders. Majority of insured drivers like to find the ideal coverage for their circumstances, at a fair rate and from a reputable insurer. Perhaps looking at the way car insurance companies assess risks and calculate premiums help us understand what we need to do to achieve our own policy goals. When a motorist is looking for a quote, he is seeking to pass the risks involved with driving to carriers. Once a policy is sold, the carrier is responsible for paying the agreed damages resulting out of set perils. Therefore, they need to get the premium right to be profitable at the end. In order to work out a fair fee for accepting the risks, they look at the details provided by the applicants. First of all, they need to figure out what type of a driver and person the applicant is. Claim history, traffic tickets, driving experience and credit score are some of the points that reveal about the driver. For example, the driver may not have had an accident in the last 5 years. Would insurance company consider him to be a careful driver? If he has a few traffic citations to his name, they might just consider him to be lucky and believe that only a matter of time he will cause an accident. Let us continue with the no claim history theme. How would insurers consider this request for a quote if the motorist has just moved into an area with high auto theft and traffic accident ratios? Would they not think that he has had it this time? Would they really believe that he will be able to keep his clean claim history? It is clear that danger level has increased with this recent relocation and they will want more money to compensate it. Consider a middle-aged policyholder with a safer family car, no claims again. If he decides to sell it and buy a powerful sports car, would the insurance carrier say, "Way to go," or, "Wow, where did that come from?" They will immediately see that the attitude to risk has changed and so the premiums will. Not as much as a younger person with one claim in the last 3 years, but it can easily triple. So, insured automobile tells a lot about the risk attitude and expectancy of claims. Then, there are the costs of repairing an expensive car and paying out if it is totaled. However, the rates would have increased even they were only insuring the liabilities and damages to that particular vehicle was excluded. Furthermore, every provider knows that they are not the only ones in the market. They would love to charge through the roof, but that would make the customer go somewhere else. Still, every company has a type of driver they are keen to be associated with. If they are looking for older and stable motorists, they will fight for them with great discounts. Those firms would probably not be offering keen rates for younger drivers. Generally, for every risk type there is a keen insurer. You would say who would be keen to insure a youngster with a new license? Well, they are the ones who will pay top dollars to be insured. They may have to pay 3 to 4 times more than the established driver. This would be enough incentive. Besides, some underwriters believe that they can sort out the good from the bad better than others. They hope that they will keep getting the top dollars from responsible young drivers, all the while avoiding the purely dangerous ones. This brings us to the conclusion. If you want to lower car insurance premiums, you will need to think about your choices. Going for a car with the latest safety and security features will mean that the chance of a theft and sustaining injuries after an accident will be lower. If you really do have a great driving history, living in a nice neighborhood, have a top job and one of the safest cars, you should demand the best rates ever. So put yourself into the shoes of an insurance company and think who you would like to insure. Then, see if you could change a few things about your particulars that will bring your insurance costs down.